It's definitely celebration time, ladies and gentlemen. We are almost to our 500 subscriber threshold. We just passed 450. We're 90% of the way there. Pretty exciting stuff. Gonna blast out the live stream to the Discord. Let's go. Dun, dun, dun. Let me see. Where's the darn link? There it is. Alrighty. Ooh. Wonder if I can change this thumbnail midway through. I totally can. What am I gonna go with? Yeah, we'll just go with that for now. Just the stonks meme. BBYQ. Well, you know what they say, curiosity killed the cat. Oh, that's bad. Yeah, that's bad. That's bankruptcy for you. How goes it, Jose? FYI, not sponsored, but this Dr. Pepper strawberry zero sugar thing is lit. So, I haven't looked at Dutch Brothers stock, but I will say I used to live near one, and the line was always like going out of the parking lot all the way like around the block, basically, when they would open. So, yeah, like they must have some really good addictive stuff there, because those people were willing to wait in those long ass lines for that Dutch Brothers. But since you bring it up, why don't we take a look? Okay. Interesting. No PE, so not profitable yet? Huh, ticker bros. I like it already. Alright. Well, this is... interesting. Whoa. Holy revenue growth, Batman. I can see why you said they're growing fast. And That's weird. Did their share count really go down that much? Do you know when they went public, Jose? I wonder if this share count's right. 50 million shares? So I see what you mean about the revenue growth. Yeah, that's pretty impressive, not gonna lie. I'm gonna guess they must have gone. Maybe they went public like late 2019, early 2020, and that's why we have some of the 2019 numbers. Okay, so they've got the growth, but yeah, free cash flow negative $2 per share. Which I guess if they're doing a lot of capex for their growth, that probably makes sense. To be honest with you. And honestly, 9 cents in the negative on EPS, like, who even gives a crap, right? If they're growing that quickly. I mean, I wonder why their gross margins went down so much. I guess coffee is a commodity, so maybe the cost of coffee beans went up or something. Is that a thing that happened in the last couple of years? Coffee beans got more expensive to import or something? I feel like I've heard something like that. Let's take a look at the assets, cash and equivalents. I mean, it's not totally bad. How about, until I got to the debt. All right. Debt growth, 315%. I mean, I guess at least they're not diluting so much if we trust those share count numbers from before. So, yeah, debt growth, 315%. With interest rates being what they are, that could be a little concerning. But, I mean, shareholders' equity, 129 million. What was their market cap again? 4.6. I mean, it's not really one that you would judge mainly based off their balance sheet anyway, so the fact they're not in the hole, I guess, is a good thing. Yeah, the debt is definitely like, man, I would hope, I mean, I guess, like, I would hope that they have a long-term plan to get that under control, you know? But at least they have more assets than they have debt or liabilities, so that's something. I'm curious about the capital expenditures now. All right, so yeah, operating cash flow fell, and then capital expenditures went up, and hence the free cash flow has plummeted. But again, it's normal to have heavy capital expenditures if you have 50% growth rates, right? And it seems like they're funding it with debt instead of dilution. So, yeah. And anecdotally, like I was saying, they have lines literally like around the block when they open in the morning in some places. So, obviously people really love whatever they're selling. All right. Now, here's the question. Hey Ryan, how you doing? The big question, though, is in the long run, do we think Dutch Bros is a Starbucks killer? Oh, yeah. Ryan's a Starbucks bull. Yep. I've got to be honest. I mean, I've had Starbucks. I don't go there regularly. I have yet to go to Dutch Bros because ain't no coffee worth waiting in a mile long line, at least for me. All right, you guys. I think we got to set up a cage match. It's the only way to settle this. Oh man, if I can, if I can get back to training, Jeremy, he wouldn't know what hit him. Uh uh uh. Ryan, are you talking about like the whole like union thing where they're trying to organize? Heck, since we're talking about it, why don't we pull up Starbucks? So yeah, with Dutch Bros, the big thing is probably the debt. Ooh, so you're not too impressed with what you see when you go in the store? Well, there is, I guess, there is the issue, I suppose, of if they unionize and it destroys the bottom line and Starbucks can't, you know, continue as a going concern. Like, you might be negotiating yourself out of a job in the long run, even if you win that fight in the short run. Not every business model can sustain unions, you know? And, and nothing against baristas, but I don't think, when Starbucks opened, they had necessarily intended for people to maybe be baristas forever and that kind of thing. I mean, I always kind of viewed it as something that like somebody does as like kind of their job when they're like a student or something, trying to get by and that kind of thing, more so than like a career path as a barista in a Starbucks store, But and that might be a little that might not be well received in some circles, but let's see. Actually, let's look at the income statement real quick. I mean, just interested in seeing the difference in the gross margin. Okay, so Starbucks has gross margins that are like double what Dutch Bros had. Ryan, do you have any insight on that? Is it their scale and pricing power, you think? Or is it that Dutch Bros is maybe using more expensive coffee beans or something? Whoa. Hey, man. I wouldn't say it's about the value they bring to society, right? I think it's just a matter of like what's the skill level required, and how many, like what's it's a supply and demand thing. Like, what's the supply of people in the labor force that have the necessary skill set to to replace that position if it came open, right? Yeah, no doubt, no doubt that hey, like the barista exists because some people don't want to get up off their ass and make their own damn coffee, right? Like, if it wasn't for that, Starbucks wouldn't even exist in the first place. Because, I could be like Graham Stephan and make coffee at home for 20 or 30 cents or whatever it is, right? Well, honestly, Jose, I was going to say if their gross margins looked like Dutch Bros, that's not really... I mean... But they with 68% gross margins, it's hard for me to feel bad for Starbucks when they're 68 cents of every dollar people spend there is gross profit. They're basically printing money. Though, actually, a guy I used to work with, he was a barista at Starbucks during his college years, which is maybe that's why I have that perception of that job. And he told me that he really liked working there and they took pretty good care of their people. So I don't know what has changed since then to where they're dissatisfied with whatever the deal is and, want to form the union in the first place. And maybe it is just certain locations, Maybe if the management in certain locations sucks, the workers feel like they've got no other option, right? Wow. I mean, honestly, for a company as scaled up as Starbucks is, I'm honestly really impressed by this revenue growth. Because people were joking about how there was a Starbucks on every corner back when, like, the second Austin Powers movie came out. Which, I mean, that's probably before... that might even be before you were born, Ryan. Actually. Yeah, so... this is my view, right? I think if you've got a pretty decent situation wherever you're at, I don't necessarily hey, I have a pretty good situation where I work. I definitely wouldn't want a union personally, but if I was, say, so if I was working a job where, say, it was potentially hazardous because of corners being cut and it required, skilled labor, but we were being mistreated and that kind of thing. So there's a reason why, like, the skilled trades and stuff, like, have, for construction and stuff, why they have unions and why auto workers and such do, right? Because at one point in time, there was no like OSHA or anything making sure that the working conditions were safe for human beings, right? And they realized, like, hey, there's not a lot of people out there, like, relatively speaking, that have this high skill level in, say, like, carpentry, or if they worked in an auto plant, like, the ability to, like, operate the machines or whatever it is, right? And assemble the vehicles. So they realized, like, hey, collectively, we can kind of insist that they, like, make things a little bit better and safer around here. And, more power to them in that instance. But I feel like you do have a harder time making those same arguments in a situation like Starbucks, right? I mean, legally, they're within their rights, for sure, It's a tough conversation. I mean, and obviously, like, if you're a shareholder, you view that as, like, an impingement on the bottom line, right? And so you're thinking, this doesn't sound good. And, I also don't really moralize on my investments at all, right? So, Altria, for example, I mean, they've killed how many people with their products? But Or, I mean, maybe a better way to put it would be that the people who use their products killed themselves over a very long period of time, right? All right, later, Ryan. Thanks for stopping by. But yeah, in the past, before it was like common knowledge that smoking was unhealthy, which I don't know how that didn't like be like ever enter into like the common sense thing, but I think there were instances where tobacco companies covered up studies, showing links between their products and cancer, etc. And there were some different legal things that happened, and some settlements and such had to be paid. But at this point in time, right, I look at it and I say, okay, at this point in time, who is smoking cigarettes that is not fully aware that it's bad for you? Whether they're old smokers, new smokers, whatever. So I sit here and I say, it's sort of like, it's morally pretty much neutral, right? Because people have their vices, they've got a demand for their vices, and heck, even your Starbucks coffee, with all the stuff they put in there, all the sugars and creams and all that stuff, the flavorings and whatnot. I mean, that's kind of a vice too. I mean, caffeine is an addictive substance. Not exactly the same as nicotine, but they both are pretty addictive. And it's just people like to have their little vice or their little treat or whatever you want to call it. And I think that's going to just be the case for the rest of, in perpetuity, really, for all of humanity. We've always been that way as people. We have different, I mean, thousands of years ago, they basically did the trial and error that it took to figure out how to make different plants into slightly poisonous liquid that they could drink in order to, feel, fun or interesting or feel goofy or whatever, however you want to describe being inebriated, right? So, oh, Volunteer. Didn't realize I still had that window open. So, Jose, do you have any shares of Dutch Bros? How much, if you don't mind sharing? Oh, okay. As a percentage of the overall portfolio, is it relatively minor? Because like for example, I've got a similar amount of Palantir. What's your biggest position? Which one? SPY? So, did you go with SPY or VOO for that? Haven't heard of that one. Admiral shares, huh? Huh. You know, I will say Vanguard's got some nice low expense ratios. You know, even like 20 some years ago, the average person, their options were basically pay like $9 a trade on E-Trade to, you know, buy individual companies, or pay like 1 or 2% a year to some fund manager to buy mutual funds. Those were like it. Like when I was going through like high school and they were like explaining like the stock market and like 401ks and stuff. These were like these index funds like basically either didn't exist or nobody had, like, the word hadn't really gotten out yet, right? But now, like, if somebody wants to just basically invest in the market, they have a ton of really, you know, solid choices to do so and not really take any extra risk or anything like that. But me, I've got zero index funds. I guess. Yeah, you know, I think now. Do you do it through like an IRA or something like that? That's probably what I would suggest. You know, to, like, if I could talk to my like 19-year-old self, that's probably what I would suggest is you know, an index fund and an IRA, a Roth IRA specifically. Yeah. So you're doing pretty much exactly what I would suggest to my younger self if such a thing were possible. Although, again, I think when I sorry about that, had a little bit of a connection disruption. If you're still there, what's your biggest individual stock, or are they all kind of just like smaller positions of a few $100? Ah, Disney. So, what makes you like Disney better than, say, like a Comcast or a Paramount? Yeah, the century of content makes them you know, pretty strong in their respective area, but man, they got crushed in terms of their theme parks and their cruise lines, dragging them down during the pandemic, right? And they just for whatever reason, they haven't been able to bring that bottom line back. You know, here's something that I guess, yeah, that's my issue, right? That they, all right, so nobody makes money in streaming except for Netflix. And I mean that in terms of like Netflix is the only one where if you just took the streaming service by itself, it would show positive net income, right? Every other company that's now in streaming losing money massively. And the reason I struggle with that is, well, okay, Netflix started off with just mailing people DVDs and somehow managed to become profitable streaming, having to, build out all their, infrastructure for it and kind of figure it out from square one, having to either buy all of their content from somebody else or produce their own just exclusively for their streaming service from scratch at a very high price. Yet they managed to be profitable. Where you have Disney come onto the scene with possibly the best existing library of content already at their fingertips, right? To just put out there on, all they had to do was basically develop an app and then make the content available. And yet somehow they can't manage to be profitable at it. And somehow just that very general idea just strikes me as absolutely ridiculous. And their inability to make that into basically an economically viable thing, a business unit that adds economic value and creates value for shareholders, that is what turns me off to Disney at the moment, I think. Hey, maybe there's like, maybe they, or they're dumping a ton of money into exclusive content and stuff like that for the platform. But, oh, Jacob, what's up? I was just ranting about why I'm a little bit hesitant to be in Disney versus something like Comcast or Paramount. Now, Paramount, don't get me wrong, they're floundering a bit lately too. But when I look at the valuation metrics, if Paramount's earnings and cash flow return to normal levels, the multiple I would be paying for that normalized cash flow is so much lower than with Disney. And I think Paramount Plus, again, if they can do this, thing of actually making their streaming platform profitable, I think they're a sleeping giant in that area, and they're small enough that they could become an acquisition target potentially. I don't know necessarily specifically for who. I would guess either Amazon. Yeah, probably Amazon, if I had to guess. And I like Comcast because, one, basically a huge chunk of their business is broadband internet, which is essentially a public utility, right? So, unlike Disney, who's got, this theme park / cruise ship business that can absolutely just tank in the event that there's something going on in the world like the pandemic, right? And they have these huge costs associated with them that they still have whether or not they're bringing in money. And this unprofitable streaming service and movies that are flopping, dropping movie theater attendance or movie theater attendance is maybe dropping is wrong. Maybe it's just recovering more slowly from the pandemic. But you have all that working against Disney, and they're getting a bit big for their britches, to be honest. But then you've got Comcast, who they're backstopped sort of by that broadband internet business, right? Like, that's super sticky. And if anything, people upgraded their internet during the pandemic because they needed to work from home. And work from home is a lot more sticky than people expected it to be. And they don't have... I mean, granted, yes, their legacy cable business, like cable TV, like, I feel like maybe people in like their 60s and 70s have that, and not many people younger anymore. So I think there's probably, an expected decline there. I think cable TV as we knew it when I was growing up in the 90s is not long for this world, right? But yeah, I think Comcast has enough going for it, though, that that won't end up being all that meaningful in the long run. But Disney, so much, like, I just see it as like it's got so much potential, but I feel like the potential is all priced in, and they keep kind of not reaching it, Does that make sense? But don't get me wrong. They've been around 100 years. They'll be around another 100 years, right? So I think, in the really, really long-term sense, like you said, you were 19. I think when you're 50, you will have done just fine having Disney for that 30-year period, right? That's just, my personal take on that. But I think, over the next, 3 to 5 years, it's like, what are they doing, And I'm a bit of a stickler for valuation and such, and I just don't think they're justifying their value, I don't think their value is justifying their price today. I think they need to kind of get it together a little bit. Or the price just needs to come down more. The price comes down more, and I'll say, hey, Disney is historically a pretty phenomenal company at what they do, and I think the decades will be kind to them. Longer time frames will be kind to them. And heck, they've got the MCU, and they've got Star Wars, and they've got just the core Disney stuff. I mean, shoot. It's good to be Disney in that sense. Yeah. And granted, right, I think if their bottom line, right, I mean, look at what happened to their net income. It used to be in this 7.5, 8, 9 area. We had some jumps and then some drops, and it just hasn't quite recovered. So I think people are still pricing it as though it's back at like the 7 to 8-ish area, right? Because then we'd be looking at like a 22, 23 PE or something like that. If their net income were to go up by like 2x, the PE would fall in half, right? So I think people are just assuming that they're gonna get back here. And yeah, I think they will eventually, but like, why pay a premium for basically waiting and hoping that they get back to what they used to do when they've kind of, like, I don't know, they've just been failing. They've been kind of just floundering and failing to get back to just like pre-pandemic levels, right? And I mean, we're talking way pre-pandemic, actually, on these 7 to 8 numbers, right? Just before the pandemic, they were. I mean, but granted, this was like the height of the MCU. and all that good stuff. Like, they were just killing it, right? And yeah, people, and during the pandemic, the price was going out of control because people kept getting excited about the subscriber counts on Disney Plus, and nobody, for some reason, the market was still in that phase of everybody only cares about revenue. And so the subscriber growth on Disney Plus, they were like, oh, look at all that revenue Disney Plus is bringing in. When the parks reopen, this is going to be great. But nobody, I don't know, for some reason, for a period of time, people suspended the need to care about the bottom line. I mean, it's been ugly. 59 cents of free cash flow on a company that's trading for what were they trading for? $91. Like, oof, it sucks. Like, you can get a savings account that gives you better cash flow than that. And I think at some point people are going to realize, like, hey, I can get 5% on a CD, or I can get 3.75% on a high yield savings or on treasuries or whatever. And they're going to be like, what the heck am I doing sitting here like paying 40 or 50 PEs to get pennies on these stocks, right? When I could just basically do what amounts to throwing my money under a mattress and get like a better return. But again, I do think that over a really, really long time frame, you'll do just fine with your Disney. You are in the envious position of having time on your side in the best way possible. Do you own your individual stocks in the IRA as well, or do you buy those in just a regular brokerage account? Oh, so speaking of, I think I was bringing up Altria earlier. Womp womp. Haunted by the ghost of Jewel. So it looks like they agreed to, and granted, $235 million isn't all that much to Altria, right? Their free cash flow is like $8 billion a year or something. But yeah, it's the ghost of Jewel. Look, accusing them of fueling a teen vaping epidemic because they invested in Juul Labs. Like, that's a stretch, dude, to be honest with you. That's a stretch. Like, where's the personal accountability? Like, hey, what about the people who sold the vape pens to those kids? Or the parents who weren't watching them? Like, no accountability for them. As an Altria shareholder, I am highly disappointed in stuff like this. All right. They marketed to teenagers with sweet flavors and flashy social media. Okay, I've got a news flash for the plaintiffs in this lawsuit. Teenagers aren't the only ones who like sweet flavors, and teenagers aren't the only ones on social media. Like, millennials aren't teenagers anymore. We're freaking middle-aged now, okay? And like I know people in my age range who like to vape. They like the berry flavor and whatever. And they've been doing it for years, which means they've been doing it since they're like mid to late 20s, not teenagers, okay? And that's like most of the people I've known who have vaped have been in their 20s or 30s, right? Like the fact that teenagers also get into it to feel like they're cool or like they're older or whatever, the same reason they got into, I mean, kids smoked cigarettes at my high school because they thought it was cool, not. And it's a rebellious thing too, to some extent, I think. But the fact that just the fact that it's like, oh, if your advertisement happens to appeal to people and which, by the way, like, teenagers are on the cusp of being young adults, right? So if you're trying to appeal to young adults in their like early 20s, de facto it's going to probably appeal to teenagers too. You can't like just separately appeal to somebody who's 22 versus somebody who's like 17. It doesn't work that way. See, there's my main man Matt coming in and telling it like it is, right? Hey, I like berry flavored stuff too, okay? Not sponsored, but like I said earlier, this Dr. Pepper strawberry zero sugar thing, it freaking slaps, all right? It's good. I'm 35, by the way. But, hey, somebody should probably put the kibosh on Dr. Pepper for marketing this strawberry flavored, beverage to kids, because that berry flavor appeals to teenagers. Which, by the way, there's a full sugar version that could be contributing to early onset type 2 diabetes in, teenagers who drink excessive amounts of it. Where's that goddamn class action lawsuit? Yeah, exactly. I mean, granted, the zero sugar variety isn't going to give anybody diabetes, but they have full sugar versions of all these flavors, right? I choose not diabetes. I choose life. But, I think most teenagers just grab the full sugar stuff, right? And it's silly. It is absurd. So, let's see how the chef's doing. Yummy. Who's in the mood for a vegan Buddha bowl thing? Wow. This used to be $28 a share, guys. That is ridiculous. As far as I know, they never turned a profit. Imagine paying that much money for a company that never turned a profit. That would have made their market cap 54 times. So would have been like $1.1 billion or something like that. $1.15 billion. Assuming that the share count was the same. Actually, probably wasn't that high because they massively diluted, but yeah. Whew, nice. Oh, I just bought some Nikes. They haven't come yet, but I ordered them this week. Why don't we take a look at Nike? Do some DD on those shoes I just bought. So, honestly, like, okay, so 5, 6, 7, whatever percent rev growth, with some in the double digits also, but mostly in that like 5 to 7 range. Honestly, I would be, if you told me a shoe company was doing mid to high single digit growth over this long of a period of time, a shoe company that's been like the biggest shoe company for decades now, I find that actually really impressive, to be honest with you. This is a very high quality business. I mean, you've kept their gross margins so consistent over the years too. Look at this. 44.77, 45.98 now, and yeah, the lowest it ever got was in the 43s. Like that is so awesome. Imagine that material costs never fluctuated enough to drop their gross margin below 43%. Man, like talk about consistency, right? I just wish they were cheaper. Like I still, at the end of the day, I don't think I can pay 33 or 34 times for a shoe company that's growing at like 7% a year, you know? Mm-mm-mm. Wow, that EPS growth is pretty pretty creamy, to be honest with you. Man, I wonder what the DCF would be. Womp womp. Honestly, I think 9.3 for 10 years is probably a little generous. I'll give them credit for their tangible book value. I don't think it'll drop down to 4 though. Like they've done too well for me to say that, so we'll say it drops to 6. Yeah, I mean, this is one of those ones where it's like, yeah, it's got to drop like probably 30 or 40% before I'm even interested. Nike. And hey, if you want like an actual like above market return, yeah, you probably need it to fall about in half. But then again, I mean, to make 8%, you'd need it to fall to 75. And granted, like, hey, maybe you think my growth numbers are too conservative, but I feel like, I mean, it's in line with their revenue growth, but their EPS growth has been better than their revenue growth. I don't know. But also, I think you do want to be conservative, right? You don't want to assume because they've had some double-digit EPS growth recently that they'll keep that up forever, right? But yeah, shame. Like I said, I just wish this company was cheaper so I could somehow justify it, because I am very impressed by Nike right now. Granted, I'd be more impressed if my order got here by now. I think I placed the order on like Tuesday and it's Saturday and I still don't have my shoes. My old shoes are falling apart. Oh, you know what I was wanting to also see if there was anything new going on with 3M stock. Oh, they're below $100. I haven't seen that in a while. 52-week low, 98. Was that an intraday? Must have been an intraday. Yeah. Oh my goodness. May 16th. 98 bucks. Wow. 3M is getting slammed here. Man. Wow. I feel bad for anybody that got in 2018. Gosh, that's rough. So I actually feel good. Jacob, what's that? Warrant inventory? I'm not super up to date on all the goings on with Nike, so I might be a little out of the loop on that one. But geez, what the heck? 3M. I mean, a PE of 10. Whew. Well, this probably explains why one of my old 3M videos randomly got a bunch more views recently. Maybe it's time for a follow-up, guys. Make the algorithm love me some more. Oh, yeah. A gun Instagram video. I'm not see. You're making me feel old. I'm not familiar with any of that. In fact, this is how out of touch I am with sports ball and such. I haven't even heard of that NBA player, nor have I heard about anything involving a gun Instagram video. What specifically? I mean, there must have been something bad that happened in the video. I mean, is it just the fact he was in a video and there was a gun there too? That was he holding it? Was it an illegal gun? Like, did he point it at something? Like, what did he do? So because he was waving it around. Man, people care. People choose to care about like the silliest shit, you know? Yeah. I get it, I guess, but yeah, that kind of thing, not even on my radar at all. Imagine having the time to be outraged about something like that. Must be nice. I mean, I could go grab a gun right now and wave it on the stream if you want. That'd be fun. Then maybe I mean, hey, they say that no publicity is bad publicity, right? Like, there's no such thing as bad publicity. If people are, if you're getting clicks, then it's a good thing, right? Oh, speaking of guns, why don't we take a quick look at... So, I have a pretty hefty amount of shares of Smith & Wesson. Looks a little bit good year to date, but... And I wish I could say I got in here, but I actually started getting in, like... Oh, man. Like... this area. So on some of my shares, I'm bag holding. In one of my smaller accounts, anyway. The TD account, my average, I think, is in like somewhere between 10 and 12. I can't remember exactly. But I'm doing okay in the TD account. But yeah, on my smaller Robinhood account, I'm getting beaten up bad on my Smith and Wesson. Wow, has it really been an hour already? So, ladies and gents, I'm gonna hop off and get about my day. Thanks for coming by and chatting with me. It's been real. If you're not on the Discord already, link is in the description. I'll see you all around. We'll do another one soon. Take it easy, everybody.